Hello, hi. Good afternoon. This is Rajat here from Finogent, and today we'll be talking about the markets, how the stock markets have fared, and we'll be covering broader three to four aspects. First, what did the market do, and what the investors should do about it? Point number one. Point number two, what are the top three news that had happened between today and a couple of days back, which is affecting your money, so that we can figure out the way how to tread that news and manage the portfolio. The third point would be there have been an earnings season going on. So some good news and some not so good news had been from the earnings season. But even I will be listing out a company which had done 200% of the returns, but still the stock fell. Which is the company, why it happened, we will be figuring that out. And then there would be a top takeaways for investors. For the short term, which stocks we can look into, for medium to long term, which stocks we can look into. So these are the two things we would be working on. So let us start with how the markets have fared. In the last 2 days, we have seen that markets have been at an up and there has been a gain into the markets and Nifty. But then in yesterday, say on 13th of August, it shed all the gains. Today, it was much like a flat performance. However, 0.6% fall had been in the mid caps. While we say that there have been some good stocks like Trent and all of those which have zoomed past, backed by their strong stock performance. Like we have been very advocate on a couple of things that it is a stock specific story as we are going through the very turbulent markets. Not only because the Indian stocks are at a very high valuations, but also there has been some geopolitical issues and all those things going on, and job data from the US that has been impacting the markets. So that is on. So what range Nifty was today? So Nifty today was in the range of around 24,000 to 24,500. It was maintaining that range, and that is a crucial support range, I would just say. We have been looking into, unless until there is no such a great news, we can't see an upside happening. However, many of the stocks are feeling a downward pressure because many of the stocks had gone up by around 20 to 25, 30% over the last quarter or so, or even the 6 months for that matter. So therefore, the point is key, what the investor should do. First and foremost, the broader sentiment is bearish. So therefore, make sure you are not 100% invested into the current market. So therefore, your exposure has to be primarily into some cash, and it has to be primarily into some of the bonds, or take those stocks which have fallen in between. Yes, there will be a cases where you are currently holding the stocks which had given the returns, but that might have retraced back. Kirloskar Brothers is one of the very fabulous, I would say, the stock. If you would see in the last fortnight, it has corrected a lot, but has not recovered a bit. But it is a very good stock with a good project pipelines. But this is how the thing. So therefore, the matter is, as an investor, you need to be very while you can say apprehensive about the volatilities, but that doesn't mean you have to but stand on the buy stands and not participate into the market. Take gradual risk, but that is how you need to approach the market. So this is as far as the market goes. The second point that we are looking at is, say, what are the top three news that is impacting the market. So first and foremost, let me point out a figure whereby RBI has asked banks to increase the weightage to manage the risk across which entities. So banks are financing or extending the loans to MFIs. 2 days back, RBI had said that the weightage by the housing finance companies, so HFIs, also have to manage their risk well. So they are trying to get that in sync with NBFC. Now, for the big banks, it has asked them to increase your weightage to the loans they have extended to MFIs. So this means the bottom line of the banks will get impacted because they will have to now keep more cash to it. So therefore, obviously, banking stocks would be a drag quite a while, unless and until the rate of interest does not start correcting, and it's not too much of attractive market for that matter. So therefore, this is one of the segments where we don't see value happening in the near future. The second thing is that metals and mining. So today, you name the stock, whether it's Tata Steel or whether you say the Hindalco or Vedanta, they have corrected by around 3 to 5%. And the reason being, the Supreme Court has come up with an order that they have to give tax. They have to give tax on the mining rights and all other things retrospectively. So if you ask me from the metals and mining space, what impact it would be having on the sector, it will be around 60,000 crore. So 60,000 crore at the sector level will be happening. However, Tata Steel has already told that they have kept around 17,000 crore already separate to take care of these issues or expenses coming up. However, some other companies have said that they are not impacted, Hindalco being one of them. So Hindalco, as per Hindalco, they are not exposed to this risk because there are no dues outstanding from them. However, if you say the states which are being impacted will be Orissa, Jharkhand, and Tamil Nadu. So therefore, steel companies who have their projects in all these three states will be impacted. So the point is, so if you're looking forward to make a short money or a quick money, so if you have been looking into NMDC, because NMDC has given a fabulous return and has been one of the very cheapest stocks available into the markets. But however, if you are stuck with it, it's a long game. It's a very good game. Companies are good, but then your approach has to be accordingly while you look into the same. So here we have seen the judgment of the Supreme Court and the RBI. So for an investor, if you think that you have invested into the stock and you will make money just because stock is trending or the good news is coming, it is not case. You have a risk of regulation risk. There is a Supreme Court that comes with a ruling. There is an RBI that comes with a ruling, and then you see impact happening directly on the banks or the impact directly happening on the entire sector for that matter. So therefore, if you see it is like a Aladdin ka chirag for you to make money, that is not there. Yes, it is a long game, but short hauls you need to take while you are managing your investments, and it is more like a tactical war rather than a strategic. I have invested and I have made money out of it. That is not the case, because in my next section you will see why I am saying that. So therefore, now we are looking at the key news that has been impacting the market. We know that currently there is a corporate earnings going on. Many of the companies like Trent had given 45% fantabulous returns. We had been investing into the Trent around 8th of August, and since then we have seen around 15 to 20% upside into the stock happening. So that has been a fabulous run. In the recent past, we've seen RVNL, Mazagon Dock, and all those Texmaco Rail giving fabulous returns. But if I were to tell you that today the Mazagon Dock returns had come and they have seen a profit of 130%. 130% surge has been a profit of around 665 crores. The stocks have risen today. However, if you see over the last fortnight, it has very nicely, deeply corrected. So it is a very good, still at a PE of around 40s, but it is really a very good stock to look forward to from medium to long term based on the budgetary allocations as we see from Government of India towards infrastructure for that matter. Then you have an HAL which has beaten the estimates. RVNL has also corrected a lot in the recent past, and it has also given a orange lines green ahead to the orange line completion of the project. Now these are the one or two things. Now we know that the corporate earnings are coming, and these stocks we had been invested into a fortnight or 20 days back, and we had also booked the profit into it. The point is, if the market keeps on swinging between highs and lows at any given point in time, if you are a trader, you will have to work it as look it as a working capital in progress. So if you invest in a stock, you get a decent return out of it, say 10 or 15% in a short term or a month's time, then you can exit out of it. You can look forward to exit out of it, and just don't be complacent with your investments, because the matter is like Mazagon Dock, it had gone to the high, it had corrected over a period in time, so you might have lost that gains that you have reserved for yourself. And obviously, because the results are coming up good, so they might be jumping up quite fast, but after that you need to rationalize, because the logic is simple. If I am investing for 15 or 20 years, I know that the average return and stock market will give you will be 15% or an 18%. Now think that if you have a stock that has given you around 60% returns or a 70% returns in last 1 year, do you think that it will maintain that 60 or 70% returns over the next 10 years period? It will not maintain. It will rationalize down to 15 to 20% at max. So if that is happening and you are already sitting on a stock that is 70% up, so obviously the price correction will happen. The market players and the market effect on that will actually be taking place. So as an investor, you need to be very not spectacle about it, but very cautious about it before you take a call. So now in these corporate earnings, there have been a stock that had come which is called as the Texmaco Rail. So Texmaco Rail had given a profit up of around 180%. So if I may say, what had happened into the stock is it went down on Wednesday despite the railway company clocking in the highest numbers. And its revenue has risen by 36%. The Freight Care division, they have contributed the lion's share into the company's profit, which accounts for around 38% for that matter. But so the point is, in the recent past, the stocks have gone so much high that the market players or how it swings out is one thing. Even if the good results come, the profit booking happens, and those who have made the profit will be coming out of it. So the matter of fact is how much big a profit booking is happening. That is what we need to look for. So these were the main things. And now the last part of this session is while we are looking at all these things, how an investor should look into the portfolio. First and foremost, if you think that investing in 2024, and that too primarily starting in 2024, and you can maintain as an average or a run rate of 20% or a 30%, it is not going to be there. It is not going to be there, provided if you are managing it on a month-on-month basis as a trader. So if you're looking at a trader and you think that I have to maintain a 20% run rate annualized, and obviously the same should be on the month-on-month basis, you won't be able to do that, because if the market itself has corrected by 6 to 8% or 3% of the whole sector, like metals and minings, it has happened corrected today. Can you maintain a run rate in that sector which has already got corrected by around 3 to 4%? You cannot do that. So therefore, as an investor, you also needs to know that I have to be very rational in terms of my expectations out of the market. So I may have a Ferrari with me, but if I have a muddled road, and with whole of puddles, I can't speed it up at 300. I can't speed it up in 3 seconds to 100. I can't speed it up. That is what happens in the equity markets. You can dump all the money into the market, but if you think that I can make money in the next 3 or 4 days, will not be happening, because the whole sector, the whole economy should be stabilized in order to go on to the momentum. Because at the end of the day, even if you are acting as a trader, you have to follow the principles of momentum. If the momentum itself is not into the market, how can you make a swing into the market if you're working as a trader? Now, if you're looking at the investor, then you can be two type of investor: a short-term investor and the long-term investor. Now, here comes my last session with it. That means if you are looking as a long-term, if you're looking yourself as a long-term investor, then where I need to look into. You can look into the news that has come of MSCI index. The MSCI index has already announced that Dixon Technologies will be included into it. So there are a couple of stocks which are going to come into the Dixon along with them into the MSCI. So they will be seeing a fund flow of around 500 millions or so happening into it. Shakti Pumps in the small cap. Many of the investors were apprehensive about small cap stocks, but the Shakti Pumps, which had been ruling the roost and going up like anything, has now been included into the MSCI. The India's contribution or allocation into MSCI itself has increased from 17 to around 22-23%, with only 1.5 to 2.5% gap between the allocation of India and China. So therefore, if you see that the global confidence into the Indian indices is already being taking into shape and is being included, and India is seeing an increased allocation into the MSCI index. And not only that, even India's stocks for that matter, like Shakti Pumps or Dixon Technologies and many other companies, even HDFC Bank has seen an increased allocation into it. So this is how. And if you see कि short term में हम क्या करें, या कौन सा ऐसा stock है which has come down, based on the fundamentals, risk appetite that you are having, and in type of your ingenuity and the way you are an investor, the focus or attraction that we are seeking is, say for example, top of the mind recall, and based on the fundamentals, the recent price correction would be the Mazagon stock, 40 PE, fundamental strong, and then let's see how it ties on to the spending by the private as well as the government players for the expansion of their both sides. So this is Rajat, and in order to summarize it, let me put it wholly and solely together. The point number one is, if you are looking at an equity market, you need to have a conservative approach but calculative approach. You cannot stop loss every transaction that you can enter into, because if the market itself is going down, there is no point in putting a stop loss in coming out of it unless and until the stock itself has exhibited some weaknesses fundamentally. Otherwise, or technically, you can say there has been too steep a sale, then you can do a stop loss. Otherwise, you need to wait and watch. You need to wait and watch, because the market also needs a breather. So market also needs a breather before you can jump in, and you have to tide that. You will, if say you are riding the sea, so you have to tide with the ocean. You can't go against it. So therefore, second thing is that when you're banking on the stocks and taking positions into the stocks based on the corporate earnings, you can fall into a prey of, say, Mazagon or Texmaco Rail, clocking in 180% of the profit, but still getting corrected. So this is one of the catches that happen into the stock market. So just do not invest into the stock just because the corporate earnings are coming up, unless and until it doesn't fit fundamentally or technically in your investment style or style of investments for that matter. So therefore, we have an holiday tomorrow 15th, and then because it was also an expiry today, so that has also had been an impact. But then there is a Friday, only one trading day, then we will be on Monday. So therefore, we might see maybe some volatility coming on Friday. Let's see how the global cues add on to it. And now this is Rajat signing off. Thank you so much. If you have any queries, you can drop me down the message, and I will be more than happy to address them. Thank you so much.